When you hear the word investing, what immediately pops into your head? Are you picturing Wall Street, high-stakes boardrooms, or maybe you're picturing thousands of dollars just burning a hole in your pocket waiting to be traded? Well, welcome to today's Explainer, where we're going to completely dismantle that picture right out of the gate. For literally decades, the old-school financial world kind of made us believe that investing was this exclusive club, right? A game reserved entirely for the wealthy. We tell ourselves things like, oh, I'll start investing as soon as I save up a few grand, or I just don't have enough cash to make it worth it right now. We are confronting that myth head-on today. Because honestly, waiting until you have a massive pile of cash to start investing is actually the single biggest mistake you can make for your financial future.
So let's dive right into it. I want to ask you the single most common question that holds back almost every new investor out there. How much money do you actually need? Like, if you were to empty your pockets or check your bank account right this second, what is the bare minimum required to get your foot in the door and start building sustainable wealth? Well, here's the shocking truth. $1. Seriously, no joke, one single dollar. Thanks to modern financial technology, the barrier to entry hasn't just been lowered, it has completely collapsed. You can literally start with $1. Micro-investing apps, robo-advisors, modern brokerage accounts, they all now offer $0 minimum deposits and no commission trading. The financial tools are finally right at our fingertips, which means that old excuse of not having enough money, that officially no longer exists.
Let's look at exactly how this huge shift happened. Back in the old Wall Street system, if you wanted to buy stock in a major tech giant or a massive retail company, you had to buy a full, whole share. And that could cost hundreds, sometimes thousands of dollars. If you didn't have that cash on hand, well, you were simply locked out. But modern investing offers a total game changer, and it's called fractional shares. Think about it like this. If a stock costs $500, but you only have $5, you can buy exactly $5 worth of that stock. You own a fractional slice of that company. And if the stock goes up, your $5 grows at the exact same percentage rate as a millionaire's investment. How cool is that?
So the absolute crucial point here is that the real barrier to wealth isn't money anymore, it's mindset. I absolutely love this quote from longtime investor Jasmine Birtles. She says, "You can do it with a tenner a month. You don't need more than that to become a successful investor." And she really hit the nail on the head there. It perfectly reinforces that you don't need a massive salary or even a perfectly organized financial life to begin. You just need to shift your mindset and take that very first small step.
Section 1. The Power of Compounding. Why Small Amounts Outperform Big Regrets.
Now, we've established that you can start small, but I know exactly what you might be thinking. What's the point of investing $5 or $10? A 10% return on $5 is only 50 cents. That's definitely not going to make me rich. But the math shows exactly why investing a tiny amount today mathematically beats waiting for a fortune tomorrow. And the answer lies in the absolute most powerful force in finance: compounding interest. Basically, compounding happens when your investment returns earn returns of their own. Over time, this creates this massive wealth-building snowball effect. You aren't just earning money on your original $1 or $5, you're constantly earning money on the growth itself. And the key ingredient to make this snowball massive? Time.
Let's look at a highly rational comparison to see this in action. Imagine scenario A. You wait 10 whole years, meticulously saving up in cash so you can make one big lump sum investment of $10,000 all at once. Then we have scenario B. You start today, investing just $25 a week. That is basically the cost of a few cups of coffee or maybe a fast food meal. Which person ends up wealthier? Scenario B wins every single time. And that's because consistency always beats intensity. Over those 10 years, the person in scenario B, who was just investing $25 a week, will have contributed around $13,000 in total. But here is the magic. Because their money was actually in the market that entire decade, compounding and growing week after week, their overall portfolio value will easily beat the person who waited 10 years just to drop an intense $10,000 lump sum.
And this brilliantly illustrates the exact difference between saving and investing, whether we're talking dollars or pounds. Think about this. If you leave 10,000 pounds in a standard savings account at a 1.5% interest rate, it grows to about 11,600 pounds over a decade. Not terrible, right? But wait, factor in inflation, which averages around 2.5%, and you would actually need 12,800 pounds just to maintain your original buying power. So sitting in savings literally means your money is mathematically losing value. Now, take that same 10,000 pounds and put it in a globally diversified index fund, growing at a historical average of 7%. Boom! It nearly doubles your money to 19,700 pounds over the exact same period.
Section 2. Build your financial foundation.
money management first.
Now, just because you can start investing with a single dollar doesn't mean you should throw your very last available dollar into the stock market. Before we put your first dollar to work, we need to secure your foundation. Step 1, build an emergency fund. Start with $500 to $1,000 and ultimately aim for 3 to 6 months of living expenses. You know, the stock market fluctuates, and having this cash safety net prevents you from being forced to sell your investments at a loss when a crisis hits, like, say, a broken down car. Second, clear your high interest debt. This is huge. If you're paying 20% interest on a credit card, paying that off guarantees a 20% return on your money. No stock market in the world can guarantee that. Finally, establish a long-term mindset. Investing works best over years, ideally 5 or more, not months.
Section 3. How to start today. Making healthy, rational choices. Okay, now that we have those foundational boxes ticked, it's time to build a practical roadmap on how to actually execute your first investment today, completely stress-free. First, you've got to decide on your approach. You could go with lump sum investing, but that exposes you to market timing risk, meaning if the market dips right after you invest a huge chunk of cash, it can be absolutely terrifying for a beginner. Instead, consider small monthly contributions of maybe 10 to 25 pounds or dollars. It's much safer. This strategy is known as pound cost averaging or dollar cost averaging. By investing a small amount consistently, you automatically buy more shares when prices are low and fewer when they are high. It beautifully smooths out the market's natural ups and downs.
So here are your 3 concrete steps to begin right now. Step 1, automate your transfers. Please do not rely on willpower. Set up an automatic transfer of that 10 or 25 directly into your investment account every single month. Step 2, choose broad, low-cost index funds or ETFs. Don't try to gamble on individual hype stocks. It's just not worth it. Buy a tiny piece of the entire stock market instead, which gives you instant, safe diversification. And step 3, ignore the market noise and stick to the plan. Headlines are going to get scary, markets will dip, but true investors don't panic.
Listen, if you only remember one thing from this entire explainer, let it be this core takeaway. Time in the market beats time in the market. Wealth isn't about perfectly predicting the exact right moment to jump in. It's purely about how long you let your money work for you. Actually, scratch the idea that starting small is a mistake. The biggest mistake isn't starting small. The biggest mistake is not starting at all.
Which brings us to my final question for you. How much will you start with this week? You know, improving your financial literacy completely transforms your mindset from being just a consumer in this world into being an owner. You don't need to be rich to start. You don't need thousands of dollars. Stop waiting for the perfect financial moment, because guess what? The perfect moment is today. Take whatever you can afford without stress, automate it, and begin your wealth building journey right now.